Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Thursday morning, we haven't had a very good week when it comes to the equity markets. Week to date, we're down almost 1% on the headline indices. Third straight day of losses yesterday, and today, of course, you have the Sensex expiry. So expect a fair bit of volatility today as well. But yesterday, 25,800 was breached, on an intraday basis, not on a closing basis, on an intraday basis. And of course, we are very close to the 50-day EMA that's placed at 25,765 as well. But I think that is the crucial level to watch out for in today's session. Of course, we'll touch base with our technical experts and figure out what are the key levels to watch out for, particularly in today's session, given the fact that it's the Sensex weekly expiry. In terms of news flow, there is a lot to digest. There was a TCS analyst day yesterday, and they have declared, their AI revenues, and they have said that AI revenues are actually growing faster than their regular revenues. So yes, that's something that the street will, of course, react to. And of course, we have the SEBI board meet outcome as well. Lots to discuss on that front as well, because in terms of the total expense ratio, there has been a bifurcation wherein SEBI has introduced a base expense ratio. Statutory levies will be different now. Separated now. So yes, lots to digest, and we'll see how AMC stocks and brokerage stocks really react to that. Brokerage caps have also been brought down, but they haven't really been brought down by the quantum that was being feared. So whether or not we see a leg up, on brokerage stocks as well, that's something we'll be watching out for. In terms of the GIFT Nifty, hinting at a negative start this morning as well. Brace for a weakish start. Perhaps, we could see some bit of buying coming in later. Who knows? But we'll, of course, figure out at 9:15 when the market opens. Lots to digest. Your queries as well. Keep them coming in. We'll try and get them addressed by our experts. But before we do all that, quickly take a look at the top stories at this hour. Wall Street ends lower as AI sell-off resumes. The Dow sheds over 220 points while the Nasdaq falls close to 2%. Asian markets open lower and the GIFT Nifty suggesting a flat start for the Indian market. Oil prices rally after US President Trump blocks oil tankers entering and leaving Venezuela, raising global political tensions. Gold and silver prices also inch higher on soft US labor report. In fact, silver topped that $66 mark for the first time ever. Good news for mutual fund investors. The market regulator SEBI approves new norms around mutual fund expense ratios, including all statutory levies from the calculation. Also, caps brokerage at 6 basis points for all cash market, transactions. The national capital continues to grapple with severe pollution and dense fog, prompting the implementation of GRAP Stage 4 measures. The Supreme Court also allows ban on end-of-life vehicles, reinstating ban against diesel vehicles older than 10 years and petrol vehicles older than 15 years from plying on Delhi roads. All right, we saw, a negative close for the third straight session on the Lal Street. All the major indices, in fact, ended in the red, barring the PSU Bank Index, of course, that managed to eke out gains of somewhere around 2% or so. Nifty Bank Index also ended the day in the red. Metals IT saw some bit of green on screen, but, you saw real estate once again taking a sharp knock. Financial heavyweights, of course, the likes of ICICI Bank, HDFC Bank were out of favor yesterday. M&M, L&T, these were also among the two big laggards. Mid-cap index continues its underperformance. In fact, market breadth was also firmly in favor of laggards. In terms of rupee, dealers said that RBI, of course, intervened. So it hit a fresh record low of 91.08 at the start of the session yesterday. But then it recovered 1%. Almost 1% from those lows and came to around 90.3 or so, those kind of levels. This morning as well, I think the rupee is somewhere around that 90.3 mark. Yes, it's at 90.35. So yes, a fair bit of appreciation coming in after hitting record lows yesterday. Meesho was the showstopper stock yesterday, hit 20% upper circuit, and the volumes were also fairly high. UBS has initiated a buy call on the stock, and they had pegged a target of 220 rupees, and the stock very close to that level as well. Of course, silver continues to rally, so Hindustan Zinc was another stock that stood out in trade. But the main talking point is the fact that we saw some buying coming in from the foreign investor community. I don't know how long this will last, but foreign investors were net buyers to the tune of 1170 crore rupees in the cash markets, and DII buying support continues. They were buyers to the tune of almost 800 crore rupees in the cash market. Put call ratio declined further to 0.77 vis-a-vis 0.9 in the previous session. And Bandhan Bank is one stock that will continue to remain in FNO ban. It has been in the FNO ban for quite some time now. But to understand what to watch out for in today's session, given the fact that it's weekly expiry on Sensex, Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal, joining in. Chandan, lovely chatting with you as always. But 25,800 was taken out on an intraday basis, and that 20-day EMA placed at 28,765. What are the chances that we drop below that as well? But also want to point out that the India VIX also cooled off quite a bit. So that's some comfort for the bulls. But how are things looking like today? Given the fact that it's expiry, would you be expecting a fair bit of volatility as well?
Good morning, Nandita. Thanks for having me. So if you look at the Nifty setup, index has been making lower top, lower bottom from last 3 trading session, and levels are slightly shifting higher. However, major trend of the market is positive, but the minor trend is slightly turning to profit booking mode. There are a couple of reasons behind it. The weakening rupee is the reason of the hiccup in the market momentum. We have seen sustained call writing at 26,000 strike that is now acting as an immediate barrier, and the next barrier is near 26,253, 25. That is the lifetime high. So multiple barriers are there in the market before it start any sort of reversal from the current zone. FI's long short ratio is below 10%. However, FI is bought on the last trading session after a long time, but their long short ratio is not turning upwards. So because of all these reasons, I believe range bound bias could be there. On downside, we have multiple support near 25,500, 25,600, but on the upside, hurdles are visible at 26,000 to 26,050. So we have to deal with this broader trading range between 25,500 to 26,050, and I believe market would be in this broader range as of now as we head towards the end of the year. If we talk about the India VIX, the VIX has been falling down from last 4 weeks, or corrected from 13.85 to below 10 marks. Now it is at historical low levels. Lower VIX is good for the market, but lower VIX is not allowing market to catch the momentum as well. So I believe we need to deal with the same. And if you look at the gain theory, we have noticed that in the last 5 years, second last of the week usually remain with some selling pressure. So I think there is one more key trigger which is keeping the upside limited in the market, and it can retest the key support zone before turning from the current zone.
Okay, that's the view. And how are things looking like when it comes to the bank Nifty? It's firmly below that 59,000 level as well. So is the setup more positive or negative compared to the Nifty on the Nifty Bank Index?
So the mixed setup, Bank Nifty outperformed the broader market. If you look at the YTD basis, year till date, the Nifty index is up by around 9%, but Bank Nifty is up by around almost 15%. So outperformance was clearly seen, but now some profit booking is visible. The good part is it is holding well above 50 DMA, but broken below 20 DMA. Multiple supports were visible near 58, 800, 900 from last almost 20 trading session, and I think hold below the same could open some more decline. So till it holds below 59,250, we believe it can retest the key support near 58,500 to 58,250. So major trend remains intact, but for short term point of view, some decline could be there to retest the key support before it start the next leg of rally.
Okay, that's about the Nifty Bank Index. So, we'll talk about some stocks in details in just a bit, but I want to get your thoughts on some of these AMC and brokerage stocks after the SEBI board meet outcome. Of course, the kind of brokerage fees that was proposed, of course, the quantum that was expected was much worse than what really happened, right? So in that sense, when the proposal was made, we saw a good correction coming in on brokerage stocks and AMC stocks. Some of them corrected anywhere between 5 to 15% since then. Would you expect a relief rally across the brokerage and AMC basket today? What are your thoughts?
Yeah, so I believe this theme is likely to do well, but on short-term point of view, we have seen a corrective move in most of the AMC related counter. Here I want to mention one name, that is Aditya Birla ABSL AMC. It has recently formed the bottom near 710 and formed the double bottom with negation of lower top, lower bottom. It has been making high top, high bottom and holding well above its supply trend line. So I think here buying interest could emerge with support of 750. It can head towards 800, 820 marks. Apart from that, I believe some other name could be in focus. But yes, when I talk about AMC or exchange or broking related companies, disclaimer and disclosure will be there. But yes, I believe certain name from this segment could see some buying interest.
Okay, fine. There could be some buying interest coming in when it comes to some of the brokerage names and as well as AMCs as well. But let's take stock of how the markets have really kicked off for the day on the back foot as was being expected. The GIFT Nifty was hinting at a muted start, and that's exactly what's happening. We are below that 25,800 level. I don't think we've broken that 25,765 level just yet, but we are very, very close to that level as we speak. Sensex down almost 150. Broader end of the markets as of now moving in tandem with the benchmarks. Weakness here as well. 80-point cut on the Nifty mid cap index. Breadth is even Stevens, exactly 1:1 as of now. But let's see how things pan out. Let's wait for that to really settle down. But in terms of sectors, let's take a look at which are the sectors that are doing well. PSU Bank Index extending gains. Yesterday it gained 2%. Today, as of now, it's gaining 1.5%. So almost 4% kind of gain in the last 2 days. IT is another one that's up almost 1%. Yesterday, IT was also in the green, and today we are seeing the IT index extending gains. We'll see what TCS is doing, given the fact that it has declared its AI revenue. We'll take stock of how that stock is doing in just a bit. But real estate again at the bottom of the heap, down 1.5%. Autos on the back foot. FMCG as well, down 0.5%. Bank Nifty, 0.5% cut there as well. Pharma, metals, all of the other sectors are trading firmly in the red. So barring PSU, banks and IT, all the other sectors witnessing some bit of selling pressure. Take a look at some of the gainers on the index. Wipro, Infosys, TCS, HCL Tech and Tech Mahindra. All 5 stocks are among the top gainers on the index. Infosys is taking the lead as we speak. Revamps Finance ahead of that board meet tomorrow to mull fundraise. That stock hit a fresh record high yesterday and it's extending its gains. It has of course hit a fresh record high today as well. Up somewhere around 0.5%. 869, that's where the stock is at. Aside of that, yesterday's big loser Max Healthcare, that's seeing some buying interest today. Tata Consumer, that's also another name that has been on the gaining side, and today it's gaining somewhere around very flat but still trading with a positive bias. On the flip side, what's not doing well is Tata Motors passenger vehicles. That's the top Nifty lagger, down 1.5%. Some other auto names like Bajaj Auto, M&M, Eicher, Maruti, all of them are trading in the red today. So autos as a basket are not doing well, and some of these top Nifty laggards are from the auto universe. Eternal, that's again down 0.5%. HDFC Bank and Kotak Mahindra Bank, these are among the laggards. HDFC Bank, remember, and ICICI Bank were among the top laggards yesterday, and the weakness is extending into today as well. But just want to see what some of these brokerage stocks are doing. After the SEBI board meet, I can see HDFC AMC, that's up 4%. Some of the other capital market plays, I mean the entire capital market basket as a whole is doing well, and these AMC stocks in particular are extending their gains. But let's talk about IT, particularly TCS. Chandan, yesterday they had their analyst day, and they have reiterated their aspiration to become world's largest AI-led tech services company. They've highlighted a few metrics to quantify AI for the first time. They've executed over 5,000 AI engagements, and they've said that AI-related services have generated $1.5 billion on revenue on an annualized basis, and AI business is growing ahead of their overall revenue growth. That's the key takeaway from the analyst meet yesterday. And this is approximately 5% of the company's revenues versus 3% advanced AI revenues reported by HCL Tech. So yes, that's the key takeaway. A lot of global brokerages have come out with their notes on TCS. They have a positive view Morgan Stanley has an overweight call. You have Nomura, although that has a neutral call. Jefferies has a hold call. Nuvama has a buy call. So, of course, now that AI is growing faster than their overall revenue, that's something that the street was really watching out for. Of course, they will also be building that data center that they had pointed out during the earnings call. How are you looking at TCS? Would you take a trade on the back of this news flow?
Yeah, so buying interest is visible in selective IT counter after a long time, and I think decisive momentum could be here. If I look at the TCS or other name, the setup is now turning upwards, and somehow these counter can see the next leg of rally. When I talk about TCS, it has been consolidating in a range from last 10-12 days. It formed the higher base at 3150, but hurdles are visible near 3270. So positive to range bound bias could be there. One can go with buy on decline stance. 3150 is immediate support, and with that support I believe it can head towards 3350 to 3400 levels. And I think apart from that, mid cap IT could be on focus, whether we talk about emphasis or LTI Mindtree. Most of these counter are forming the bullish stance with positive price pattern. So I think one need to look at the mid cap IT as well in this market scenario.
Okay, one needs to look at mid-cap IT. Cyient is one of them. It has acquired a 65% stake in Kinetic Tech for $93 million. But if you look at the price action when it comes to Cyient, it hasn't really been very consistent. Last 1 month, it has seen some gains, but if you look at the last 6 months' performance, it has seen a cut of 15-16%. How would you look at a Cyient? And do you see signs of any kind of up move from here?
Before I reply on Cyient, let me talk about one more IT counter, that is Wipro. It has seen a strong momentum in last couple of months, and now has been giving the fresh breakout. So with support of 255, it can head towards 275 kind of level. Talking about Cyient, yes, it has been consolidating. Declines could be both, but upside seems to be limited. As of now, I believe the higher base is at 1120. With that higher base, it can head towards 1180 to 1200 levels.
Okay, that's the view on a Cyient. But, just want to ask you about Meesho. I know it's a recent listing, but, doubled from IPO price. Yesterday, it was up 20%. Today, it's up 6%. One would want to ride this momentum on the shares of Meesho. But any thoughts? Whether a caution should be warranted, how should investors or traders approach?
So it has only trade history of last 7 days, so it would be very tough to reply on the technical perspective. If you look at the price behavior, it has really has been making higher tops, higher bottom on the lower time frame. As of now, I believe the trend is positive until it holds about 210. I believe overall structure could remain positive, but yes, I think already rallied well, so some sort of caution or trailing support needs to be taken care in such counter.
Okay, that's the view on Meesho. In fact, we had a query coming in from Geetu Sandesh on this particular counter. I hope that addresses your query. But let's talk about an Ola Electric as well. The stock is near all-time lows. Promoters sold another 4.2 crore shares in the open market. Of course, the stake has been sold to pay off some promoter level loans. The stock has had a very, very rough ride. In terms of support, what are the levels that you will be watching out for?
The structure of the counter is negative, and it has been making lower top, lower bottom, corrected by more than 62% in this year, and now quoting at its all-time high. So as of now, the weak structure could continue to keep the limited bounce in the counter till it holds below 3450. I believe it can continue to decline further towards next support zone of 30. Obviously, that is the all-time high, but yes, it would be tough to kiss the falling knife till it remains below 35. Better to avoid.
Okay, better to avoid. That's the call. Let's talk about Antony Waste Handling as well. The stock is up 10%. Its ARMS JV has got 2 orders worth 1330 crore rupees from the BMC. The stock was languishing, but today's move, has at least got the last 5-day returns in the positive zone. Last 1 month also now it is giving some positive returns. The stock has been under severe pressure, and it's just coming off its 52-week low as well. What do you make of today's move? Is it does it signal a reversal, or would you say it's just like a news-based move that we are seeing on the counter?
I think there is the major trend of the counter is negative, and as of now, the structure is continuously taking the counter to lower levels. So my suggestion is better to avoid, because the structure is weak, and in that weak structure, it has spiked by around 11-12%. So try to reduce the positions. However, if I look at the last 6-7 months, it has seen a corrective move from 700 to 400 and now turning upwards. So the structure has not changed. However, today it has seen a decent recovery. We need to keep the 510 as a key level. If manages to move about the same, then only the short-term reversal could be there in the counter.
Okay, that's about Anthony Waste. But let's shift focus to our query segment then. Taking up this query on BSC from Sameer Nayak, wants to know whether it's okay to look at for a fresh entry at these levels. But of course, the stock has seen some bit of a correction in the last 1 month or so, given negative returns. It has come off 400 odd rupees from its 52-week highs. Does this correction warrant a buy, or would you wait for further dips to get into it?
I think now it should get some stability, because earlier it was finding hurdle at 25-65 marks, and it took so many weeks to surpass that level. And in the recent corrective move, it exactly retested those 25-70 levels. So technically, we are witnessing a role reversal kind of pattern where previous hurdles are acting as a key support zone. So I believe the recent bottom of 25.70 could be a key zone, and with that, I believe it can recover towards 27.50 and 28.50 kind of level. So risk reward ratio favors. Major trend is positive, turn from the key support, so one can look at the counter.
Okay, one can look at the counter. Risk reward looking very attractive on a BSE. Hope that answers your query. There's a query on NSDL as well from Amardeep Shah. Hasn't really sent a pointed query, but stock is doing okay, as in it's come off from its highs, but it's still above its listing price. How would you look at it, and would you look at NSDL or CDSL?
So if I look at the NSDL, it is in a corrective phase, has been making lower top, lower bottom on the weekly chart. If I look at the CDSL, here also we have seen a corrective move, but CDSL now getting an early sign of bottom out approach. So I believe 1420 could act as a major support, and with that support, recovery can be seen towards 1540 to 1560 levels in the CDSL.
Okay, that's about the depository stocks. Hope that answers your query. Let's move on and get a query addressed on Olectra Green Tech. Okay, this person is holding Olectra at 1300, wants to know if it's a good time to average and what are the support levels. Okay, Pooja, this query comes in from Pooja. The stock has been in a corrective phase, and she's holding it at 1300. She's making a loss here. Should she average or switch to something else?
So EV counters or EV bus counter are not doing well. In fact, whether we talk about the Olectra or JBM Auto, most of these counter are making lower top, lower bottom on the weekly chart. If I look at the price behavior of last 8 weeks, the stock is corrected from 1580 to 1150 level. So it's going to be very tough. 1130, 1110 is major support, but till it doesn't surpass about 1230, it would be tough to hold. So I don't suggest to average, just wait and watch or try to exit if any bounce happens.
Okay, wait and watch and try to exit in case there is a bounce. I hope that answers your query, Pooja. Let's move on to the next one coming in from Satya CK. Wants to know whether he should look at HPCL and PCBL, Philips Carbon Black, for a positional trade. Would you advise HPCL? Would you prefer that from the OMC basket, if you look at all three? And secondly, what about PCBL?
Yeah, so HPCL witnessed some recovery in last week, but now again the momentum is missing out. It fell to surpass 870, 872 marks, drifted lower. So again, range bound bias could be there. 450 to 472 could be the broader trading range. And when we talk about the PCBL, here the structure is negative. It has been making lower top, lower bottom. Better to avoid. It can drip down towards 280 to 85 levels.
Okay, that's the view. I hope that answers your query. The next one, I think it's coming in from Hiten, wants to know your thoughts on Bharat Electronics. He's bought at 300, wants to know the long-term view. Of course, he's making some profit here, but the stock again has been witnessing a fair bit of correction. From a long-term perspective, what should be the target that he should keep in his mind?
So like BL has been witnessing profit booking. It is making lower top, lower bottom, corrected from 430 to 380. So I believe it will take time. However, he might be in profit, but momentum is getting pause. So we need to look at the 395 as a key level. If manages to surpass, then only the short term bottom will be placed towards 420, 430.
Okay, hope that answers your query. Let's move on to the next one. Coming in on IDFC First Bank, the average buy price is 90 rupees. Should I hold or accumulate? Can't really get the person's name here. Any thoughts? Average buy price is 90. The stock is below that. So what should the person be doing now?
Actually, momentum is missing. Setup is positive, strength is intact, but momentum is missing. And I don't think it will see the significant move from current levels. It can head towards 90, but don't expect significant move beyond 90, 92 as of now. So better to reduce position and again try to buy on decline. That could be the better approach in the counter.
Okay, buy on decline, a better approach on the counter. Hope that answers your query. The next query was from Vijay, views on HCC, Hindustan Construction. The stock hasn't really seen, any kind of an uptick. Looks like it has been in consolidation zone. It's just coming off its 52-week lows as well. Do you see more downside, or do you think a floor has been formed?
So structure is negative. It has been making lower top, lower bottom. Even in last 7-8 months, in last 7-8 weeks, it has seen a corrective move from 25 to 17. Almost down by more than 45% YTD basis. Momentum got stuck. So I think better to avoid.
Okay, better to avoid HCC. That's the call. I spotted a query on Adani Green Energy from Satish. The stock is under pressure today, and last 5 days and 1 month things haven't really been all that great for this particular counter. Anything in terms of levels that one should watch out for, and is it worth a trade?
So again, it got stuck in a range. Momentum is missing. Bounces are being sold. I believe it may stuck in a range. Downside supports are visible near 950. Or immediate support is at 975. So 975 and 950 are two support. Hurdles are now drifting lower to 1040. So it's likely to be in this broader range with slightly kept upside and supply at higher levels.
Okay, momentum is missing here. Adani Green stuck in a range. Couple of more queries to go then. There's a query coming in from Shikha Kapoor, wants to know your targets on Hindustan Zinc. Of course, the stock has been moving in tandem with silver prices, hitting record highs. But do you see more upside, or do you feel it's approaching its overbought zone?
So thank you, Sikhaji, and she's regular viewer and she keeps on asking the same. I think asked many times on Insta, and I replied. And in fact, this is my preferred pick from last 8-9 days. In fact, I made some content on how zinc and copper counters can do well. Those who are bullish on the silver and gold. So positive on the gold and silver apart from copper, and we have recommended this counter many times. And thank you so much for reminding about a fantastic trade setup, which we highlighted a couple of days back. So major trend is positive. As of now, till it holds above 565, trend is intact and it can head towards 605, 610. But you need to keep in mind that already it has rallied by more than 100 points in last 8 days. So risk reward ratio might not favor. So try to buy 2-3 times and accumulate. That could be a better strategy. But overall, I'm looking for 600, 610 kind of zone in the Hindustan Zinc. And apart from that, positive stance in silver, gold, and copper.
All right, got your point, and I hope that answers your query. Last couple of queries then. This one's coming in from Nitin Kapoor, wants to know your thoughts on Dixon Tech, especially in the short term. You know, all these EMS stocks have been in the throes of a deep correction. In fact, Dixon, of course, has shaved off quite a bit in the last few months. In the very near term, how are things looking, and what should one, keep as a target for the short term?
So trend of the counter is negative. It has been making lower top, lower bottom from last 4 months, corrected from 18,470 to 12,100, now hovering near 13,100. So structure is weak. Even bounces are being sold. Till it doesn't surpass and hold beyond 14,000, I believe it can retest 12,500 to 12,200.
Okay, those are the levels. Hope you've taken note of them. But last query for the day, Alex has sent in a query on Timken. Wants to know whether the support levels are intact on this counter. But the counter has really been sideways, so to say, although it has been holding on to the 3,000 level. But what are your thoughts? What are the levels to watch out for here? And is it expected to remain range bound going forward?
Yeah, expecting the range to continue as of now. 2950 is major support. 3180 is major hurdle. So I believe as of now it's likely to be in this broader trading range, not getting any sign of bottom out or sign of breakout. So likely to be in this broader trading range, and we have to use the levels to get the trade set up in the name.
Okay, that's about Timken, and that wraps up our query segment. But before I let you go, Chandan, recommendations for our viewers this morning?
Yeah, so first trade could be buy on BSC. A role reversal price setup is clearly visible on the daily chart. Earlier, 2565, 2575 used to act as a hurdle. In the recent decline, those level act as a support. So BSC could be the preferred name. With support of 2016, it can head towards 2750. And I'll have to take one name from the IT pack. We can talk about Wipro or Tech Mahindra. Already discussed about Wipro, so I can now focus on the counter, either Wipro and Tech Mahindra both. So when I recommend on Wipro, one can buy with support of 259. It can head towards 275. And when we recommend about Tech Mahindra, one can buy with support of 1560. It can head towards 1660. So BSC from capital market, Tech Mahindra and Wipro from IT Pack could be 2-3 preferred name in this market.
All right, those are some of the names from the IT basket to watch out for, and all the recommendations coming in from Chandan. Chandan, with that, always a pleasure chatting with you. Thank you for joining in. Look forward to our next interaction, and have a great day.
Thank you so much. Have a great time.
Thank you. Thanks a lot. Not such a great time for the market. Fourth straight day of weakness. We're below that 50 DMA level on the Nifty as well, firmly below 25,800. 25,765, that's the 20-day EMA. That's also another level to watch out for on the index. Broader markets continue to face pressure. The Nifty mid-cap index is down almost 0.5%. Now the breadth of the market has worsened. It's 1:2. 800 advances to 1635 declines. So not looking good. Pain clearly visible in the broader end of the markets, as has been the case in recent times. But on that note, let me bring on board our next, big guest on the show, Feroze Azeez, Deputy CEO at Anand Rathi Wealth. Feroze, great to be chatting with you this morning. Let's focus in on the outcome of the SEBI board meeting. Of course, the new, expense ratio framework introduces a base expense ratio which excludes statutory levies, a clear win for investors. But has SEBI really done a good balancing act here? Your first thoughts on the outcome?
SEBI has done a wonderful balancing act because there are four stakeholders. One is the investor, asset management company, distributor, and also brokerage firms who give brokerage services to these. So four stakeholders are there. One biggest difficulty, I personally think investors are not too worried about a 3 bips cut in expenses because they've already been rewarded with a direct option which is 70 bips cheaper than the regular option in most schemes. That too for the last 12 years. It's not a new phenomena. It's a popular phenomena that an investor can go direct. But if a person wants to pay a distributor, he's actually smart enough to realize that cost is not the game to play, value is the game to play. That's why he's in regular in the first place. So discouraging expansion of distribution network of an asset manager or of mutual funds, which is just 2% of the US mutual fund industry, discouraging distributors is not a great thing. If let's assume cement as an industry, currently I think if you have so much more cement to sell, you want a larger distribution network rather than kill the distribution network. So I think SEBI understands that, investor understands that. Second, but transparency was lacking because it's very difficult to calculate the statutory levies, which are variable cost. Right, brokerage can be dependent on how much churn the fund manager does. How does an investor find out? So AMCs will have marginal impact, 1, 2, 3 bips. Distributors could have 1, 2, 3 bips, and brokers again could have 2, 3 bips of brokerage reduction. Is the current balance. Of course, the brokerage firms have been disappointed because they were earning only 7, 10 bips, out of which you take away 3, they lose 30% of the share, which is, I think, a little more discouraging. But I think it's a good balancing act to answer your question, Nandita.
Okay, good balancing act. But let's talk about, of course, it will have impact on AMC earnings as well. Profitability margins, would that be squeezed? How AMC stocks are rallying in trade today, but overall, in terms of earnings, what is the kind of impact you are envisaging?
See, if you look at SEBI's last 5 consultation papers or 2 mutual funds, you see the consultation paper is far more scarier than what actually gets enacted. That I think has now, to my mind, I decipher that as a strategy rather than a giveaway. Because they always expect an industry body like AMFI, AMCs, brokers to actually represent. So they come with a certain narrative, they reduce it. That's why today you see a rally in most of the stocks because what was provisioned was on the basis of consultation paper. That's on point 1. Point 2, I think AMC's profitability is going to be largely dependent on not this 1, 2 bips. It's going to be dependent on how penetration of mutual fund happens. Today, we have more demat accounts selling and buying shares than mutual funds, which is so illogical. Right? There are fewer people trained on direct equity, but there are more direct equity investors than mutual fund guys. I think today we are getting 40, 50,000 crores per month. The potential to my mind is 1.5 lakh crore per month in the next 3 years can come as net flow. If that is the expectation or that's the objective, then what you earn on your current assets becomes a lesser priority. It depends on how much growth will you get. I'm envisaging at least a 25% growth in net flows over the next 3 years, which at least means 1 lakh crores of per month inflow. Now, if that's the case, I think compromising on 1-2% on the current assets is a very, very fair price to pay for long-term greed.
Also, tell me, could this lead to a consolidation in the mutual fund industry or perhaps a shift in how AMCs really distribute products?
I think anything which has 2%, 3% in impact in the revenues will not change the industry structure. That's my firm belief. Anything which has more than 15%, 10 to 15% change in the costing and the revenues, you requires a new going back to the drawing board. So I don't think the consolidation or the fragmentation of the AMC industry will be largely catalyzed by this decision. Having said which, there has always been consolidation in the AMC industry, which is happening. And I think that will get a little more impetus, but this will not completely change the structure of the industry.
Okay. And, how should one reassess MF choices after these SEBI changes? Any categories that stand to benefit more?
Nandita, I think no, because all these changes you see are specific to all schemes, irrespective of what category they fall into, diversified, sectorial. Having said which, then we tried to do mathematics to see whether a large scheme has a larger impact or a small scheme has a larger impact. There also we simulated a 10,000 crore scheme and we simulated a 50,000 crore scheme. Both of them came in the range of 5 to 9 paisa total reduction in cost for an investor. So to answer your question, the differential benefit passed on to any category seems negligible and by incidence rather than by choice.
All right. Also for brokers, when the proposal first came out, it was feared that the brokerage cap could be brought down to 2 basis points. But of course, the reduction is much lower. It's brought down to 6 basis points. Of course, SEBI has also approved removing additional 5 basis point charge to MF schemes with exit loads. Should this be viewed, more as a relief than disappointment from a brokerage industry point of view? And, of course, stocks have corrected quite a bit since that proposal came out. So, good time to look at this end of the capital market play?
Yes, see, firstly, the 12 bips and 6 bips, if you spend 30 seconds on that number, I think those numbers are not comparable. 12 bips was including statutory levies. If you read that, if I'm right, 6 bips is without statutory levies. If you look at the same proportion, that means they have reduced it from 12 bips to 8.3 bips. That's my math, give or take. So the reduction is about 28% of the current earning, or somewhere there, about 23% of current earning. That, to my mind, could have been gone by SEBI, because you look at brokerages give a huge advantage to asset management companies. You see, in countries where they've made brokerage negligible, the extra return which the fund manager is getting over benchmarks has come down dramatically. Because today there are 30 brokers serving one fund manager. Fund manager is like a king, like Durandar type, right? Uske aaspaas sab log ghum rahe hain, right? If you take that away, will there be any impact on his performance? I personally think there will be. Time will tell. But 12 bips down to 8.3, not down to 6, because 12 included statutory levies, 6 plus statutory levies is the current proposal. Then you had a very, very interesting, again, important question, which is 5 bips on the lieu of exit load. This was one of the biggest anomalies in the expense ratio. Exit load, pehle, what used to happen was, if there was a fund investor exiting the fund before the exit load period was over, let's assume 1% within 1 year, the 1% paid by the investor used to go into the profit and loss statement of the AMC. AMC used to get richer if an investor went out before time. Now that didn't make sense. So SEBI said, okay, you have to add it back to the fund, not to your P&L. When this happened, there was some retaliation and some representation. So SEBI said, okay, charge 5 bips on the entire assets. That was like a painkiller given. That painkiller was like 5 bips on the lieu of exit load on the total assets, which are staying back. Itself is an oxymoron. That got corrected, which had to happen sooner than later. And that might have some impact on distributors of 2-3 bips and 2-3 bips on the AMC.
Okay, that's really well explained, Feroze. Just a few more questions on this topic. Of course, there have been incentives that are now allowed in public issues for select categories. Does this change how debt issuances may be priced or marketed? And will that, of course, evince more interest in terms of debt issuances as well going forward?
Yes, Nandita, it will. If you give a little extra interest rates for senior citizens, you always see Indians get attracted to small discounts given in terms of bond price or any incentive given to somebody. People grab it. So that's human psychology and largely also Indian DNA. So will that create penetration of the bond market of retail senior citizens? The answer is yes. But do I see it as a good news? I see it as a bad news. Because to analyze debt and buying debt directly, you need to do a lot more homework. You can't just go with credit rating agencies ratings, because the kind of companies which have gone default, they were not rated almost default 6 months before. They were rated AA, AAA also, just 3 months before they went default. So I personally think a debt is a far more complex asset class than equity. Because if in debt you go wrong, all your money is gone. And it never comes back. In market, 10% of your money is gone. And if you just stay quiet, it comes back. So it's a binary risk in debt. So I don't believe that anybody in India for 50 bips, 1 bip spread should put his retirals in a bond which they don't understand Z scores and ratings clearly. That's my firm belief.
Okay, that's a negative, of course, according to Feroze. But Feroze, what happens to smaller funds? Do these are these caps negative for smaller funds who do not have access to extensive research reports?
I think, see, today brokerage houses serve most of the funds very, very equally. I'm speaking about the top 10, 50. Because brokerage is a unitized revenue, right? So if somebody gives a block of 5 crores, also he gets similar brokerage. So I personally think today brokers' attention concentrated of 5 was not such a popular thing. If a broker gets a lot which he needs to place with fund managers, he showcases to almost 20 people at once on Bloomberg screen, so that there is equal distribution of information. So I personally think small AMCs might not get a bigger disadvantage if the consultation paper was actually put into act. Then I think that definitely would have had a large disparity between the top 5 AMCs and the bottom 5.
Okay, got it. Lastly, on this topic, SEBI has also asked IPO-bound companies to file a summary of offer documents. A lot of other announcements as well in terms of IPOs. Anything that the investors should keep an eye out for, given the fact that we've seen such a tsunami of issues, and 2026 promises to be even bigger in terms of IPOs. Anything that investors should keep in mind with respect to what was announced in terms of IPOs?
Yes, Nandita ma'am, my take is a little different. Of course, the biggest change from an investor standpoint which comes up is the abridged version. Abridged version of the details of a company used to come with the RHP rather than the DRHP. So that now they're saying that you have to give the abridged version of your business with DRHP, which gives a little more time for an investor to study. That's a good thing for a long-term investor. But what is happening in India is most people are looking at IPOs as a transaction to be sold 2-3 days after listing. If that is the case, you have to look at demand and supply. How many times it is subscribed, what is happening in the grey market, then you put in your application. So because 80%, 90% of the volume of the share happens in the first 45 minutes of its listing. Most people change hands except institutions. Most, by which I mean 80-90% of them have sold their share within 1 hour. When we got listed, I saw the volume of our share in the 1 hour was greater than what is the total free float given in the market in the first 1 hour. So I personally think Indians are using IPOs for trading gains rather than investing knowledgeably.
Yeah. That's true. And I don't know how many quarters of earnings are being discounted in the kind of rally some of these stocks are witnessing. You look at what's really happening with Misho. In a matter of 5-6 sessions, it has literally doubled from its IPO price. But let's talk about the market as well. We are in the throes of a correction. No signs of FII buying, except of course for yesterday. But what is it looking like? Why do you think this correction is taking place? Do you think it's year-end adjustment that's at play? When do you expect this weakness to ebb? I mean, what is really happening especially after hitting record highs on the index level?
Yes, Nandita, what has happened to my mind is one thing which the market is missing is why is short covering not starting? When all the good news came, the GDP data was a positive. The repo rate cut was a good, pleasant surprise. At least 50% of them were not expecting any change. Still, with 91% of FIIs are short in index futures, the short covering rally is not starting. That is because in June, if I'm not wrong, SEBI brought in a circular which curtailed long positions in options market to 1,500 crore notional. After which, if you want to take any option delta position, not notional, delta position of 1,500 crores, you have to put cash and cash equivalent. Then there is zero leverage. Of course, so the point I'm trying to get to is, I was just wondering, 1 year back, if this would have happened, you would have seen Nifty touching 27,000 because the short guys would get caught. As soon as a 400-point rally, people are grappling to cover their shorts. That's not happening because one of the few countries which India is now, unfortunately or fortunately, of course, SEBI knows it very well. But I personally don't see that as a positive to have long positions being curtailed. So where is the weakness coming from? The weakness is coming from derivative market curtailing of long position. One. Second, does it mean that the market will not gravitate upwards? It will. but not at the same pace it would have without this limitation.
Okay, got your point. So, what should one really do at the current juncture? Should one sit on the sidelines, deploy now? Is it a good time? On the index level, of course, we hit a fresh record. We've seen some correction, but broader end of the markets is where the pain really is. How should one approach this market?
The broader market, I think, is a good place to be now. Now, in the sense, in a couple of months, in 1 month, whenever you see pain in one of the segments which is deeper, those are the times where you exhibit courage to make long monies, right? In January, the broader market was partying, right? Then broader market became calmer. Then again, it did well. Now it is relaxing. When it's relaxing and the differential performance between Nifty and Nifty small cap or NSE small cap and mid cap has gone up 10% from their peaks, then I think building small cap funds and mid cap funds is not a bad idea. That's one. From a segment of the market participation perspective. Not today, maybe in a couple of months, if you stagger and invest, you're good in the broader market. Second is that always as an investor, don't get too perturbed with 4-5 days of correction, for which a trader is there. He's worrying, right? Let him worry. For an investor, you have to see 1 year of price correction. September, 1 year, 15 months of price correction ke baad bhi, if you're saying market should still be down and that's when I'll buy, then you're being a little on the trading on the path of greed. 1 year time correction, 15-month time correction, earnings have gone up 11-12% on Nifty 50 companies. Then you start building or build one lump sum also. I wouldn't be too perturbed doing that, because next 3 years, Nifty delivering 12% compounded after a 1.5 years, 1.25 years of lull is upwards of 95% probable.
Right. Lastly, any pockets within the mid-cap end of the markets, within the mid-cap universe that has the potential to be a Rahman Dakat, if I may say so, since you mentioned Dhurandhar, I was reminded of Akshay Khanna's role. But anything that has a potential to emerge as a Rahman Dakat once the mid-cap party restarts?
Yes, Nandita. See, mid-cap is a very different universe. Low free float, $1 trillion free float, but only 150 companies. And every fund category, today markets are where they are because of domestic flows. So you have to see where is domestic flow possibly going. See, a multi-cap puts 25% in mid-cap, a small cap puts some money in mid-cap, a flexi-cap puts money in mid-cap, mid-caps itself put mid-cap money. So, and there are only 150 stocks. The large weights in mid-cap are always going to get benefited. Okay, so they will always have a 5-7 P greater than the industry comparable because of the liquidity they get. They absorb money from each category. So mid-cap is a good space to do bottom-up, especially heavyweight indices. So that's my take. Don't go sector-wise in mid-cap. Go more bottom-up, heavyweights, where influx of money is coming, because that's what is keeping it buoyant.
Okay, got your point. With that, Feroze, would like to thank you for taking our time and joining in. But I hope we can interact once again before the end of the year. So I'm not wishing you Happy New Year just yet. I would like to do it next time when we chat. So thanks a lot for joining in, and I look forward to our next conversation as well.
Look forward. Thank you, Nandita.
Thank you. Well, Feroze Azeez with his thoughts on the outcome from the SEBI board meet and of course the market at large. But take a look at the Nifty. It has broken below that 25,765 mark. That was a crucial zone. 20-day exponential moving average. That level has been broken. 4th straight day of weakness. Broader end of the markets continues to underperform. Look at the Nifty mid-cap index down 0.5%. Breadth has worsened even further, almost 1:3. That's the NSE advanced decline ratio. Just about 660 stocks advancing to 1850 stocks declining. Bank Nifty down almost 120 points. 58,800. It's holding on to that level right now. Aside of that, if you look at some of the other sectors, most of them are trading in the red. It was the IT pack that was holding out. Yes, it is up in excess of 0.5%. Nifty PSU Bank Index extending gains from yesterday. It was up 2% yesterday. Today, paired some of these opening gains, but still up almost 1% or so. Real estate, that continues to be badgered. It's it's down somewhere around 2% again. Just want to see what's the week-to-date picture. The real estate index is down 3.5%. For the week so far, and autos closed second, down 3% Friday to Wednesday. So yes, PSU Bank and IT are the only pockets that are on the gaining end so far this week, but not looking all that great. And of course, as we know, as I mentioned, we are below that 25,800 level as well, and now we are looking at breaking even below the 25,750 mark. 25,700 is the support level to now train your eyes on. Once that breaks, experts have said that 25,500, 25,400 could also be tested on the downside. Let's hope that doesn't happen. As of now, we are holding on to 25,750, and let's hope we manage to do that as the day progresses. But we are timed out on this edition of Opening Bell. I'll see you again at 3 p.m. With the market close and a fresh set of guests, and of course we'll talk about all the stocks that will be moving in today's session as well. So don't forget to tune in for that. But till then, have a good day and stay tuned to Money Control for all your other news and updates. Thank you for watching.